to talk about this market day. Jeff Saut, Chief Market Strategist at Capital Wealth Planning. Joseph Tanious, Principal and Senior Investment Strategist at Bessemer Trust. I hope I got that one right. Chris Verrone is still here, Partner and Head of Technical and Macro Strategy at Strategas Research Partners. Good afternoon to you all. Jeff, I'll start with you. For the folks that may be retail investors or the mom and pop out there that's invested in this market but doesn't participate or check on their portfolios on a daily basis, I mean, to see an 800-point drop in the Dow, that's certainly got to be scary. If you're tuning in right now, what would your message be to those long-term investors?
Oh, I think Wilbur Ross said it this morning that this inversion, so to speak, of the 2 and 10 and being that negative on it is a bit aggressive. And I would tend to agree with that. Our short-term model flashed a cautionary signal 3 weeks ago, and we actually wrote about it and raised a little cash, but I certainly didn't expect anything like this.
Joseph, what's your take?
Well, I mean, I'll echo a lot of the sentiment that's already been relayed out there. I think it's important that we don't overreact to how markets behave in any one particular day, especially a day in August where we know liquidity is relatively thin. Having said all of that, you know, when you have the S&P 500 up over 20% just in the first 6-7 months of the year, and the underlying fundamentals in the U.S. economy and in earnings are slowing down, I think you have to approach this market with a little bit of skepticism, and you have to look for ways to take a little bit of risk off the table.
Chris, the fact that we closed at lows of the session, what does that tell you?
It shows how indiscriminate and broad selling was today. I think if you look at the AD data, decliners outpaced advancers maybe 16 to 1, 17 to 1. So it was broad-based across the board. That is the type of flush that you tend to see at or near low. And I think just the response and the sentiments we've heard shows how fragile behavior still is. We're only 15 days off the S&P making new all-time highs. And the way people are talking and behaving, you'd think the S&P is down 20 or 25. We already had that. It was December of last year. It's difficult to find back-to-back 20% drawdowns in calendar years.
Jeff, I get your point that you're not too concerned specifically about the 2s, 10s inverting, but what about some of the factors that caused it to invert this morning? Chairman and China GDP growth data points disappointing, Argentinian peso sliding. Are you watching those factors closely?
Yeah, well, there's a lot of moving parts out there. You got Russia blowing up their own weapons. You got Chinese troops massing on the Hong Kong border. You mentioned Venezuela and Argentina, India and Pakistan that my friend Art Cashin mentioned. So you got a lot of moving parts out there. But I think this is an overreaction. We're probably going to test the August lows, maybe get a slight undercut low. But I still think we're in a secular bull market. I think the inversion of the 2s to 10s is not the right yield curve. In my 50 years in this business, the real yield curve has always been the 90-day T-bill and the 30-year bond, and that's nowhere near inversion.
Jeff, I know you watch or you keep track of Dow theory as well. What do you think the transports are telling us here?
Well, we're close on the transports to breaking, to a new reaction low. The Dow Jones Industrial Average, however, is not. I just looked at it in the green room before I came in here. So right now you don't have a Dow theory sell signal.
Joe, which sector would you want to be buying in today's sell-off?
Well, I think broadly speaking, it's important that you think about your regional allocation, right? We talk about the U.S. sort of being the best house in a lousy neighborhood, and in many respects, that argument still remains the same. I think taking it one step further from that, you want to be positioned and exposed to those sectors that stand to benefit from the healthier parts of the U.S. economy. So I look at the U.S. consumer. I take a look at the household net worth, the balance sheet, take a look at what's happening in the labor market. I want to be exposed to areas like technology, consumer discretionary, things like that that stand to benefit from just a healthy consumer. But going just beyond that and thinking about sectors, I think it's also important to be positioned in a way where you can withstand what we expect to be a pretty volatile back half of the year. So I look at other low volatility equity strategies, and these are the types of things that we want to have in our client portfolios.